The world-famous hearing implant company and one of Australia's few real global champions, Cochlear, is having the worst time in its 45-year history. The shares have crashed more than 60% since late January, including 40% today, after the company put out a trading update saying sales were down, largely because of the Middle East war, which is causing cancellations and delays. But it's not just that. Sales have been falling for a while because of record low consumer sentiment in the United States, and in general, the world seems to be going a bit cold on dealing with hearing loss. Now, this wasn't the first Iran war profit warning, but it's the worst, and it cast a pall over the whole market today. The banks have been saying the provisions for bad debts will have to go up, so they fell some more today. And CSL didn't issue a profit warning, but it got caught in the backwash of Cochlear, and it was down heavily. The best gain today was Treasury Wine Estates after announcing a restructure that would bring Penfolds back into the main company instead of sitting in its own separate division, an idea that investors thought had a very good nose. The US market closed a bit lower. It was up and down last night. It was down when Vice President J.D. Vance cancelled his trip to Islamabad for talks with Iran, and then up when President Donald Trump extended the ceasefire, apparently indefinitely. And if you think the market has no long-term or even medium-term strategy at the moment and is operating minute by minute, you'd be right. And by the way, here's a graph of the Singapore diesel price and the West Texas crude oil benchmark. And yes, the gap between them has got wider. Crude oil is up 36% still, while diesel has doubled because they can. Tonight, West Texas is down 2% or so, while precious and base metals are up, and the Aussie dollar is stuck at 71.7 US cents. And that's finance.